Hey everybody, so no BS, I just wanted to get straight into the technicals. Now, we had a pretty crazy week with FOMC and all those hearings. So I did want to pretty much just talk about just what we're looking at in terms of rates. So, obviously Powell, he said that he wasn't foreseeing any rate cuts this year. Now, that is what he said, but obviously, these guys, they can go back on their words pretty easily. And when we did look at the summary of economic projections, it pretty much still stayed the same for the end of 2023. We're expecting 5.1 to be the peak interest rate for the Fed funds rate this year. Now, the Fed funds futures, they're saying something else. They're basically saying, Powell, you are full of shit, and we're actually expecting 3 rate cuts. So again, I speak about this all the time, but I'm just going to explain it again. So what we're looking at in this chart is literally the spread between the March Fed funds futures and the December Fed funds futures. So ZQH23 represents the March Fed funds futures contract. The ZQZ23 represents the December. And then when we're subtracting these two, we're getting the spread of the interest rates. So right here, we are getting a reading of negative 0.6625. That is closer to negative 0.75. So therefore, we can expect, 3 rate cuts. So 3 rate cuts by the end of the year is what the market is predicting, or at least the Fed funds futures. Now, let's go on. Let's look at some charts here. I want to point out XLF. So on XLF, I have an anchored VWAP to the all-time highs. You can very clearly see when I'm on the day chart, you can very clearly see that we knifed underneath this VWAP. We knifed underneath this 50-day moving average. This 50-day moving average that's in orange is actually heavily inverting here. So you can clearly see, it's curling over pretty darn hard. You can also see that the 200-day moving average, it's also curling down pretty hard because this price action right here, that is a strong sell-off. Now, another thing to note, we do have a head and shoulders here. So shoulder, head, shoulder. But, we could go all the way down to this level right here, this neckline. Now, I do want to point out something else. I want to point out a gap. So we have this major gap zone right here. Let's see, what is this actual gap zone right there? It is 25.23 to 26.21. Now, I totally forgot to mention, XLF is the financial sector. So it's pretty much made up of large financial stocks like JP Morgan, Bank of America, things like that. So obviously right now, this looks pretty damn bearish. And, if we do break these lows right here, I do think that could open the floodgate of selling that could take us all the way to this gap fill. Now, as of right now, that's not necessarily the case. We could rebound off of these levels. So, pretty much just saying, hey, be careful about going long here because this could happen. And it could happen very, very quickly because we saw how quickly this move happened. So, just imagine another one of these moves. It would pretty much take us down to this level right here. Now, let's go ahead. Let's look at Apple. Now, Apple is pretty darn interesting as usual. So if we're just looking at Apple right here, we can see that we had this area right here, which is an area of supply. But look where we recently closed. So we're bouncing off the top of the supply zone. So, right here we have a reversal candle, and then we have a doji. And then right here, we bounced off this and then we created a hammer. So, you can't necessarily say that this is bearish. I would actually say that it's more bullish. But, going into this, I know that the macroeconomic situation is bad. But sometimes, the technicals, they totally don't give a shit, and they just do something on their own. Now, I did point out in a recent video that this does kind of look like an inverse head and shoulders. So right there is the left shoulder, right here is the head, and this is the right shoulder building out. Now, I do fully expect that at some point in time, we are going back to retest this trend line. Now, whether that's going to be next week or, sometime in the very late future. Maybe it goes all the way out till May. If this does go all the way out till May and then we do retest this trend line, it's going to be significantly higher than where it is now. So something to keep in mind. But I do feel like at some point in time, we are going to retest this trend line right here. And then a break of this trend line, I do think is going to be probably more bearish than bullish. So right now, where can we actually go? If we're getting bullish, I think we could at least get to 164.61. And then after that, I would imagine we could get all the way up to 171.40. Now that seems pretty crazy, but hey, I mean, right now you're still seeing price target upgrades on Apple. So analysts aren't necessarily too bearish. And, as long as they keep pulling this crap, we could still rally technically. The tech sector is much, much stronger than all other sectors right now. So maybe all the money just floods into tech and then, we have this crazy rally and then we sell off. So who knows? But I am expecting, if we do see more bullish upside potential, like I said, 164.42 and just more speculation if we are going to go higher than that. That 171 area. And then, we do have this trend line right here. So, this trend line we could end up rejecting off of. So it's something to keep note of. Now, if I zoom out, you can clearly see what this trend line is grabbing. It's grabbing that move right there, right in between that gap. And then it's catching all of these supports right there. So we could end up hitting this area and then back testing. So that is a potential scenario that I am paying attention to. Now, moving on, we're looking at Microsoft. Now, I did mention that Microsoft was very, very overbought in a previous video. We have this anchored VWAP right here. It takes us all the way to 272.16. We are above that right now. So let me just go ahead and zoom in. You can see right here, this day looked very, very bearish. This was literally a shooting star candle. And then we built out a doji. And then similar situation of SPY, SPY and Apple. We pretty much built out this hammer candle right there. So it's a little bit confusing right now. Honestly, we could go right back into this area, this shaded area right here. So let me zoom out so you can see that a little bit more clearer. That is that gap that we filled. Or this gap that we have yet to fill, I should say. So we could entirely rally all the way into this. So this area is right around 282.46 to 286.22-ish. So we could rally all the way there. Or, we have this trend line right here that's acting as resistance. We're grabbing this top right there, that top right there, this top right there. What if we just rally a little bit more and then we hit this top right here? So that's entirely possible. But just like I said with Apple, I do expect us to hit a lower trend line right here because right now we are in this rising wedge structure. So at some point in time, if we do cut underneath this anchored VWAP, I do think we could retest this lower trend line. Now, obviously, this could take some time to happen. So further out in time, this trend line is going up. So, maybe if we go all the way out until May, this could still do a back test and then it would still be at around 276. So always keep these kind of things in mind. So overbought can stay overbought, but there's no question that it is overbought right now. Now, oh yeah, I forgot to mention right here, we did get that golden cross scenario where we did have that 50 crossing over that 200-day moving average. Let's take a look at SPY. So SPY, we're still in that anchored VWAP sandwich. So if you see where I have these anchors, that's set to all-time high. And that low that we made where we had this strong bounce off of. So, we're still stuck in between this anchored VWAP sandwich. And you can see that this bottom anchored VWAP is lining up with this 200-day moving average. That's right at around 392.34. And we do have this 50-day moving average that is right at 449. Now, here's an interesting thing to note. Let me just zoom in right here. So as you guys can see, we had this one crazy candle right here. Do you guys see this candle right there? That is basically almost touching that 50-day. and it's pretty much cutting underneath that 200 day all in one day. So that was a pretty crazy day. So we had some serious volatility. And then look where we ended the next day. We actually made it back above the 200-day moving average. So, just looking at this, we're pretty much just wedged between this 200 and this 50. So if we do see some more bullish upside, I do believe that, maybe we could potentially go and hit this 50-day moving average again at 449, or we could hit this trend line right here. This could be right around that similar area right there. Or if we break above this 50-day moving average, I do think we could hit this upper VWAP right here, which is right at around 407.58. Now let's just build out some more scenarios here. Now let's say we make it above this. Well then, where do I think we could hit next? I think we could potentially go all the way up here and hit this upper trend line. So just take a look at this chart right here. So we have this low right here, we have this high, we have this higher low, we have this higher high, we have this higher low right here. So if we are going to continue this bullish trend, what would make sense is that we have a higher high that would hit this trend line right here, and then we build a higher low. So, this is what I'm paying attention to right here. And another thing that I am paying attention to is maybe this could be a head and shoulders. So this right here could be the left shoulder. This right here could be the head. Maybe we rally all the way up to this anchored VWAP right here. And then we consolidate to build out a right shoulder. So that is one thing, or one possible scenario that I am paying attention to. And do note, in the past year, we did have head and shoulders here as well. So let's go ahead, let's move on. Now I'm looking at the Qs. So the Qs, similar situation, we have this anchored VWAP sandwich. Right now we're very close to this upper anchored VWAP, which is right at 316.39. We did have this golden cross scenario. Let me zoom in. So, we had this golden cross scenario a while ago. So Qs have been in a golden cross in a while. And if we're just looking right here, this does kind of look like a double top. So maybe this does just end up being a double top and then we fade. Or, this ends up being a higher high and then we break above this anchor VWAP. And then if we do break above this anchor VWAP, where do I think we could go? Well, I do believe if we make it above this supply zone right here, then, it's very possible that we could go all the way back up to 334.61 and then test these old highs right there. So that is probably the more bullish scenario that I'm picking up on. Now, let me just zoom out a little bit more. So I'll show you why I have this area shaded in red. So if we're just looking right here, we have this former top right here, and then we have these former bottoms right there. So let me zoom in again right here. So probably this area right here is where we want to zoom in. So we have support right there. We have support right there. We have resistance right here. So this was a former demand zone, because you can see that every single time we went down here, we picked up heavily. And then we picked up heavily right there, picked up heavily right there. But then when we cut underneath this, sold off heavily, and then we tried rallying back into here, and then we ultimately failed, sold off again. And then we got above this momentarily, only to sell off again. So to me, this area is a supply zone, and it starts right around 314.67, and it ends right around 322.25. So definitely something that I am paying attention to, this zone right here. And do note that this anchor VWAP is actually in the supply zone right here. So let's go ahead, let's move on. Now let's look at Tesla. So Tesla, it's not doing a whole lot of anything. But right here, I do have these anchored VWAPs. I have several of them. I have one anchored right here. You can see that this anchored VWAP is pretty much catching these highs right there. You can see that we sold off when we touched this. You can also see that this was prior support right there. It was support right there. You can see that when we cut underneath, we sold off pretty heavily. Also do note that right around this area, we had these moving averages pretty much collide. And then it looked like it was going to be a golden cross scenario, but then, oh boy, was this a trap right here? That was a serious trap. So, people were thinking, oh, golden cross. Nope, nope, nope. And, now we have this 50-day moving average that is curling up. We have this 200-day moving average that is continuing downwards. So it's very possible that this anchored VWAP could meet up with this 200-day moving average. And do note that this anchored VWAP is right around, I would say like 210-ish. And then this 200-day moving average is at 216.69. We have the 50-day moving average at 180.62. We're currently at 190.41. So let's just look at this price action right now. This was an area where we were constantly consolidating. We saw a little bit of consolidation right here. We rallied, and we're not necessarily back into this consolidation zone. So, if we are going to march on higher, I expect us to possibly hit this anchored VWAP area right at around that 211-ish area. And then maybe this becomes a double top and then we fade off. Or maybe we march on a little bit higher to the 200-day moving average and then we fade off. Or, if we do break above this area, I do believe that we could see a pretty serious rally. How far can that go? Well, I'm not entirely sure, but I do want to point out that this right here is an inverse head and shoulder. So, if this shoulder does go all the way up to this neckline right there, yeah, it can have a pretty substantial rally. But, obviously we have plenty macro issues. Do note, we also have this gap right there. So this gap is right around like 260-ish. So, if we do break above this 200-day moving average, I wouldn't be too surprised if we go and we fill this gap right there. Now, that would obviously create a massive bull run in the markets. So I don't necessarily think that that situation is as likely, but I do want to bring that up in case it does happen. And just to pretty much just bring awareness to it. Now, let's go ahead. Let's look at the VIX. So, when I look at the VIX, this is kind of what makes me feel just a little bit more short-term bullish. And when I say short-term bullish, I mean like very, very, very short-term. Because look at this candle that we have right there. That candle right there, that is a shooting star candle. Just look at that wick right there. We literally sold off very, very heavily on the VIX. So I would not be surprised if the VIX right now, it's at 2174. It would not surprise me if it went all the way back down to 20. Just because, we can see several bounces off this 20 area. This is the top of a demand zone. So it would not surprise me if we saw some further upside on the SPY that would bring the VIX down to 20. And let's go ahead. Let's look at the last one. So DXY, which is basically following the dollar. When I'm looking at this, it pretty much just looks bearish to me. As long as we're underneath this trend line, I pretty much just think that we continue to get more and more bearish. So, you can see how significant this trend line is. It really started this rally right here. So we had the support right there, support, and then we came all the way back down. We consolidated, we got back above here, only to cut back down. So, if the market is expecting rate cuts and we're expecting QE to infinity, then yeah, that's not going to be good for the dollar. So right now, I'm not too bullish on the dollar just because, we're underneath this trend line and the markets right now, the Fed funds futures, they are pricing in several rate cuts. So I hope you guys enjoyed this video. Oh, and I almost forgot. I always almost forget this. Last thing, I just wanted to show you guys the expected moves for this coming week. So, make sure you take a screenshot of this or just refer back to it or whatever. There are some additional things that I did add. I added RSI just so going into the week, we can get an idea of how overbought or how oversold it is. Now, RSI, pretty much what you need to know is 70 and over is overbought, 30 and below is oversold, and 50 is pretty much considered neutral. So here, I'm basically saying, hey, you know what? If we're close enough to 70, I'm going to consider that pretty much overbought. So we can see right here, Apple is a little bit overbought. Microsoft is a little overbought. QQQ, that's slightly overbought. SPY is pretty much neutral because, we do have a lot of selling off in banks. So that, we do have some tech stocks that are rallying, but we also have bank stocks that are fading, which is kind of offsetting that. So Tesla is also neutral. Nvidia is very overbought. Google overbought and Meta overbought. So you can pretty much see that the entire tech sector is pretty overbought because we do have that sector rotation going on. So, now I do want to conclude this video and I hope you guys enjoyed it.